Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is July 19th, 2026, and we are awaiting the end of this World Cup, which has been one of the most boring World Cups I can imagine. World Cup finals I can send. But Spain is up 1-0 with a couple minutes left to go in second overtime. So it's time to come over here and catch the Open with all of us here, and we just have it right now. So S&P's modestly weaker to start the week. Nasdaq as well. A little bit of war headlines over the weekend has got us a little bit on edge. We'll talk about the sell-off that we had towards the back end of last week, particularly in semis and tech. Have a great panel for you as always on this Sunday evening. Sarah's here. Farm is back from holiday, and Pax is here. How is everyone doing on this Sunday evening?
Doing good. Where'd you go on vacation, Farm?
We had one of my cousins was getting married in Michigan, so we decided to stay a few extra days in northern Michigan, go to a lake, and fortunately we got most of it before the smoke got horrible out there. It was kind of like the last couple of days, the smoke from Canada just got brutal, but it was good times.
Oh, nice.
Well, that smoke, the smoke that we had on Thursday, and I think I don't know what it was like in northern Michigan, but in Chicago it was dystopian. I mean, it's hazy now because of the smoke, but it was on the ground. I got my car washed, and by the time I was done, when I was wiping it down, you can see stuff was landing on it. The embers or whatever the hell it was. It was crazy, really weird, and dystopian. Canada, keep your damn smoke.
What is dystopian? I'm going to be the dummy. What does dystopian mean?
Look like the end of the world, or like you're living in a disaster zone.
More tariffs coming the way of Canada, according to the president, for keeping the fires and having them come here and disrupting everybody's weekend plans. Thankfully, they were able to get this game on. The president is in town in Jersey watching this final here, so unlikely to see anything in the way of tweets between now and, let's say, the next couple hours here. But clearly, geopolitical concerns back top of mind. Crude opening the week up 1.8% to 79. That's to 84.05, and December crude up 1.75% to 79. So we're seeing a resurgence again of oil prices moving higher. Yields have been strong, moving higher too, despite softer than expected inflation prints last week. So the bond market has been on edge. We'll talk about that as well. And equities, massive dispersion, big semi and tech underperformance. S&P kind of held on for the most part in an options expiry week, as we talked about all the time with respect to the flows and the positive gamma. But those flows are behind us now. We're at the cyclical low for positive gamma support now as we've pushed through the expiry week. We do have expiry on Wednesday morning with some support, but the market should trade a little bit truer now this week. It's a kind of a quiet macro week, not a lot going on.
Yeah.
We do get some earnings, though, after the close on Wednesday with Tesla and with Google. So those will be of paramount importance to the direction and the back and forth between NASDAQ and the Dow and the Russell and the S&P. So let's kick it over to Sarah. Sarah, how are you thinking about the setup here for the week? How'd you trade last week? What we were seeing, and kind of what are your thoughts here as we head into the second half of July?
As far as last week goes, NQ, in my opinion, was pretty much the only decently tradable one. And I'm very curious to see what they do in the overnight tonight and what happens Monday morning. I'm going to show you guys. I'm going to start with the monthly view. ES is just a stuck shit show. It's not moving. We're like dead center in last month's range. It's not going anywhere. And you guys have seen that box I've had on the chart forever. This box, we are still just like dead in the center of it. NQ on the month, though, is what piques my interest. And as you mentioned, Craig, semis and tech had, they're the strong ones, or they're the weak ones right now. So they're leading kind of the downside. So that's where my interest will be this week. NQ did take last month's lows on Friday, but as I'm always talking about, the line in the sand is last month's lows. So what I want to see on Monday is, do we stay below 28.5? or do we continue to trade above it? I don't think we're going to go outside month, but we've got 2 weeks left in the, not even. How many trading days do we have? 9. We have 9 trading days left in the month. So this level is going to be really important for me and for us going forward, because even if, we can't go outside month, which I don't think at all we're going to go outside month, but we could, if we can trade above that low, we could make a hammer month and then continue up next month and trade back through that range. And something we're always talking about is ranges. And here was the range, right? You guys that have been tuning in have seen this range on my chart for months. And the thing about ranges, once you fail one side and start to kind of reclaim the range, we're apt to go and test the other side of it. So these are the 2 important levels for NQ for me, this 28.5 and then Friday's high. Because if we can trade above Friday's high, I'm going to want to be long on Monday and, attempt to start coming back through this range for a broadening formation. But there's a lot yet to be seen with that. We're kind of red right now, not putting too much weight into that in the overnight session. I really have to see where we open tomorrow. Let's look at the month on
Sarah, just real quick on that range. If we were to see a breakdown of that range, would you then say that we start to carve out the lower range that is of the same point total as that range has been? Is that something that is how you think about it? Or
well, in the strat, so your target would be, what month was that? May would be May's low would be the first target. So not quite like a measured move of that, but that would be the first target. And I don't know if on the weekly that's significant. And if we keep puking, we've got this pivot machine gun that we rallied up through the end of May. And that's where a lot of people do have stops, at the lows of these candles. So if we can get below and stay below last month's lows, this could accelerate, kind of like, I like to say like fast up, fast down. So when it moves up so fast like this, it can also kind of Eiffel Tower pattern back down. But we'll see, like this pink line, this 28.5, they might fight it out around there for a little while. I'm not sure yet. So we've got to see, and then we get more evidence as the week goes on. So maybe they stay an inside day on Monday, maybe Tuesday, they break up back through the range, or maybe they break down and continue the downtrend. We just have to see. So we just know that we're at, an important level right now, and kind of where we go from here is what we're going to be watching.
Yeah, that makes sense. What about on you're saying you were going to say on the Russell or on the Dow? Are you seeing any weak? I mean, those have been the areas that we've seen the rotations into. My supposition has been that it would take us clearing expiry week to start to see markets moving in a more correlated fashion. And so because the S&P has been largely pinned due to expiry, due to zero data expiry stuff, due to the positive gamma. But now that we're through that, the market can trade a little bit more directional in a beta way. And I'm curious, do you see any signs of weakness in the Russell or in the Dow that would indicate more broad-based indice concern, or are we still not really there yet?
I'm just kind of not too interested in them at this point. They're also kind of not moving either, but I would say that these two are stronger than ES and NQ because they did make new highs. Let's look at a 2-week chart. I mean, if we take last week's lows on both of them, well, we would probably get a simultaneous market breakdown, but I don't know, and that's okay. I feel like, if I'm not too confident, I'm not going to just say some shit just to sound like I know what I'm talking about. Yeah. I don't really know what I don't really like just where those two are and how they've been moving lately. Maybe a lot of that's due to summer trading. But if you just look at the weekly candles, they're just wicky and not really going anywhere on RTY. So that's not really something that I want to participate in. And honestly, my trading has been a lot slower, this week, because unlike Farm likes these tightening ranges. I don't. So I tend to, stay out and back. I keep an eye on what's going on, but I'm not in there like aggressively clicking buttons. And I'll let Farm talk to you about his tight range and why he likes it. He's a sadistic man.
I mean, that's a terrific transition. Let's transition over to Farm here, who we're talking about tight ranges and Farm's sadomasochism here. It's just really, I think we got to just tee it up here. Farm, how are you? I know you spent a couple days away from the screens, but I know you're watching them all the time as well. So the plan for the week, how are you thinking about things here? Can't wait to hear what you have to say about this right now.
Yeah, I mean, like Sarah said, I absolutely love being inside of a good box, and I love to go both ways. I love to go both ways.
This is a family show.
Not anymore.
What do you mean? We're talking about price action. This is just straight price action. Box ranges, and going both ways within that box is highly satisfying for me. So I know a lot of people just hate it, right? They get chopped up, but I feel like there's a lot of opportunities intraday, right? And I'm mostly an intraday trader, right? And when you have two-way trade, if you miss something because, your kids came in and punched you in the balls for whatever reason, because it was a Tuesday, and then, you got another opportunity coming in. But on to business, like Sarah mentioned, all eyes really on last month's low for NQ on a continuous chart. Sarah had the September contract up there on a continuous chart. We have not taken last month's lows. QQQ was like right there. It was within a few pennies. It was pretty stupid. But all eyes are on that. And I'm starting with NQ because it's in such a wildly different spot compared to ES. And something that I feel is somewhat unique about this options expiration is that, normally we go into these OPEX cycles and, into the actual expiration, if things are constructive, we've got a positive gamma environment. It's grindy. It's, higher levels of dispersion generally compared to the rest of the cycle. Usually what's happening is momentum is strong into that, and you get this max dispersion, and out of OPEX, you get that beta unwind, like Craig said, and momentum goes to hell. But like momentum is what they sold the shit out of coming into this OPEX. So it's a very unique situation here where tech and momentum has had its ass handed to it into this options expiration. So, like Craig said, do we see continuation to the downside and a correlated move because NQ breaks down and ES just goes to hell with it? Or are we just going to see another rotation back into, tech and momentum to offset maybe, the Dow components taking a breather in ES? And that's what, we're going to find out, I think, this week. We've got tech earnings sort of ramping up, and, we'll see if, we get some kind of FOMO. People don't want to miss out on potentially amazing earnings, whatever. But who gives it? That shit's boring. Let's just talk about price. I still feel like, if you look at this profile on the left, I'm starting with this high time frame profile, right? This is the leg up from the year-to-date low. And then off the right, it's sort of the leg down from the top. And I mean, we're still in this range, right? We're still comfortably in this range. And every single time we've come down here, anywhere, let's say below 28.6, 28.2, in that range, we've seen nothing but really one-sided trade, right? Sellers are covering. Buyers are initiating. There just hasn't been a whole lot of interest there yet. That same type of response we saw on Friday. Again, it's an options expiration day. Are sellers really looking to, take this lower and break this range on a Friday OPEX day? Maybe it was just kind of that. But I mean, look, I'll try to make both sides mad tonight if I can, both the perma bulls and the perma bears. But if you're looking to initiate a short down here on NQ, there's a fair chance you're going to be pooping into a figurative colostomy bag, for the foreseeable future. It's just a bad idea. Doesn't mean it can't go lower, right? But for me, I'm very cautious down here on the short side. I'm taking profit on shorts. I want to see what happens. Now, to Craig's question, if sellers can properly flip these lows, again, call it 28.2s, 28.1s, to resistance, there could be a problem, right? I agree with Sarah. I'm actually monitoring down to the May lows. Back when we came down here the first time, I talked about a prospective balance forming above the May low, and that would form a nice 3 months balance coming down, into the May low range. So I see this general area, 27.6 to 28, as maybe kind of a look below and fail area. If you're short and you see something like that, you see a reactive bid come in that then just kind of reclaims this range, this past week's low, last month's low, you might be in some trouble, right? You do not want to see that. And then 269 roughly would be the key reclaim. So that to me is what this week and next week is all about, right? I mean, do we break this range, actually break this range to the downside? And if so, there are some bearish things to be talking about. If there's some kind of a failed break, or we just kind of float off these lows, then it's a little bit of a different story. I do feel like this week is a situation where testing lower first and failing is probably more bullish than just floating higher, right? So I would actually rather see these lows taken at least on ES, if not NQ as well, and then come back into range, like Sarah mentioned. On the September contract specifically, we have taken last month's lows, didn't do it on NQ continuous, and we didn't do it on QQQ. So I'd like to see that failure lower first, and I think that could be a good look. But I mean, this low on Friday was not that bad on NQ. Again, was it just covers because it's options expiration and it's bottom of range, or was this really strong buyer stepping in to defend range low? Doesn't really matter. But to me, if we are violating this low meaningfully and we're finding traction below this past week's low, I don't think anybody wants to be long. But I'm just very wary of traps for bears there. And then I also see this as a low that you could see bulls attempt to work against early in this week, right? So I've got this spot right where we're sitting, basically the 691 to 718. I feel like protects Friday's low, and maybe just a little lower into the 660s or something could be key. But I mean, the thing is, we've got a bearish RTH gap here, which you don't see on this chart because it's full hours, but we've got Thursday's low to Friday's high, this 29050 to 29079 range. So if we're trading higher, but we can't get back above that gap, then to me, that's bearish consolidation. And I really feel like NQ is not going anywhere until it reclaims this 247 to 269 range, potentially 369 to 397. Like, sellers can show up at any time. The fact that they do continue to cover in these lows gives them the opportunity to defend pops. So NQ is not out of the woods on any kind of a trading higher scenario, but I do feel like it starts to feel like sellers maybe have dropped the ball back above this 369 to 397 spot. Again, not that they can't defend there, they can, but they ultimately would have to trigger a fresh loss of 29050 to 29079 on NQ. So to me, like this week, next week, it's all going to be about what NQ is doing at that range low, because CES is still sitting here and broadly holding this very clear inflection range that we've looked at, right? I mean, it's just right there. It's still fine. The 74.69-ish range into the 70s has been very well bid recently. I think if you lose that, that's a problem, and we could come back down to 73.50s potentially. And so, like, again, do we see like this big rotation back into tech, and like financials take a breather? Some of the industrials take a breather that have done well. I mean, we will see. But for ES, and I'll keep it a little bit short and zip it here, but I mean, I have to use this RTH bearish gap from, again, Thursday's low to Friday's high, 75.39 to 75.48. I think there's a little bit of additional clarity and strength above 75.58 based on where this location is at on that higher time frame profile I just showed you. I feel like we could scoot back up to 76.18 to 23 reasonably quickly. In that scenario, there are a couple of spots I'll have on as daily levels here, but I do see it as bearish consolidation below 75.39 to 75.48. And then again, if we are cleanly offering this 74.69 to 74.72 spot, then I think most likely we're at least coming to 74.05 to 10, and maybe the 73.57 to 63 spot. So this is going to be sort of a major pivot for me, I suppose. I don't want to just say that I'm long above a pivot and short below it in this case, this type of a pivot. But I definitely am favoring bulls if we're sustaining above that RTH gap and at least 58 for sure. And then kind of similarly, I mean, you can see these relative equal lows sitting here in the 69 to 72 range. Ken Griffin is on my shit list, and he's risking getting kicked out of Discord because he fell one handle short of that. We've been over this before. He'll get thrown out. So he should come down and clean this up, I think, and tag 69 to 72 properly, maybe sweep these. You're going to be watching for a look below and fail. But again, 39 to 48 would have to reclaim. So to me, that's going to be the big spot for this week. And we'll see, does ES finally catch down to NQ? Or, does NQ get strong and it just keeps BS in this choppy bullshit, which I love, or what? And I think we're going to find that out in the first couple of days this week pretty quick.
Yeah, for sure. And reminder that Korea was closed on Friday, so Korea's back in trading tonight, I believe. So that'll help set the tone for the tech trade. Some of those DRAM names had nice reversals on Friday off the lows, so we'll see what happens. But before I get to PAX, just a reminder in chat to make sure you send us a few likes, and if you have any questions for us, definitely feel free to reach out. But PAX, how are you thinking about here the setup for this week? Last week was some activity. 2 weeks ago when we were on the air, we were like, let's be patient, let's wait, nothing to do. Last week when we spoke, we said last week was going to be kind of a grindy, weird week, for S&P, basically a pin week. We'll see what happens with the CPI and PPI print, which came in weaker than expected. But we both kind of agreed that the back half of July, likely to see some more activity. How are you thinking about things now?
Same. We're talking a lot about the range, that the ranges that we're in. Ranges are dangerous for a lot of reasons, and one of them I think is it lulls traders into a sense of complacency. I can buy them here, and I don't really need to stop, and then we have a breakout. We break out and expand the ranges when we least really kind of expect it. So one of the things that I've learned in this business many times over and over and again is to expect the unexpected and to prepare for it. As we saw in the World Cup, and Spain, I tweeted this at the beginning of the show. Spain exhibited something that every long-term profitable trader knows in the bottom of their soul and heart, is that a good defense is paramount to a winning or positive offense, to a winning offense. And good defense wins championships. Good pitching wins World Series. And I don't care if it's stuff you're listening from me, the things that I tweet about, that talk about, or if you're reading or listening, or any of the podcasts I've done, or you listen to any of the things that Paul Tudor, I'm not comparing myself to Tudor, but anything that Tudor Jones talks about, or anybody, that has been around a long time, that are traders, active traders, you must be able to defend yourself in every circumstance. You must be able to protect yourself in every circumstance. This weekend, I had 40 people from all over the country, from the PAX group into Chicago that I hosted. We had drinks and dinner on Thursday, Friday, and Saturday, and a big long group. I had a conference hall at the Drake Hotel in Chicago yesterday that we sat and talked about the markets. We talked about life. We talked about trading, which mirrors life. Life mirrors trading. The way you live is the way you'll trade. And there were a couple of guys that have shared, their experience in making, making tons and tons and tons of money when it's easy, and when we're stuck in ranges, or when we're just in a massive bull market, that always ends up blowing up and giving everything back, and then some, and then blowing up their lives when the market rolls over. So these markets will roll over, and when they do roll over, it's going to take a lot of people with them. What is the line that Warren Buffett likes to use? Is when the
tide comes in, you see you sort of swimming naked. The tide goes out, you see you swimming naked.
Yeah, you see who's swimming naked, and there are a lot of you people that are swimming fucking naked. Excuse my language, and so use stops on everything. The NASDAQ has got huge support down here, 28,200 to 300. Specific, okay? 28,300. We roll over through there, and the NASDAQ, by the way, is obviously, the NASDAQ is leading to the downside, or the S&P is leading to the upside, whatever we end up doing towards the end of the month, in the next couple of weeks. But if we take out that level, I mean, we're looking at vacuums of air in the NASDAQ on the downside, into the 27 handle, into the lower 27 handle. Then we had a gap last week from Thursday to Friday, RTH gap, that we had not filled, only by 20 points, but people tend to forget about those gaps, so anyway, that's 28,227, which is June's low, needs to hold that. If it doesn't, we roll over. A lot of people are going to be long and buying those dips, and when they roll over, they're going to get it shoved in their ear. The S&P, the S&P feels like it's The S&P feels like it's even more dangerous from that aspect because when it rolls over, there's a lot of weakness that it's got. It's just it's going to go. We're below the 50-day moving average in both. Well, in the Nasdaq, not so much on the S&P, but way below it, headed towards the 100-day at 27,585. Bonds can't hold a bid. The bonds catch a bid, they rally a point and a half. Everyone's getting excited. Rate hikes off the table, right? And then they sell off again. Gold is a great trade. That's all it is a trade. From none of these levels have changed. Okay, so from October, going back to October of 25, a year and a half ago, that quarterly pivot was 39.83. So these levels don't change. They'll always be flattened zones, always be pivots, and always places I will take a long at and short above. So this quarter's quarterly pivot is 40.78. The trade we've been talking about every Friday and every Sunday in the last few weeks is 39.83 to 40.78. And if we get above 40.78, then you take a long with confirmation above 4100 and 41.39 up to 43.25. Okay, now, long-term gold, I want to be long gold. I want to buy more physical. But for now, I think it's a little bit of a trade. We completed the trade on Friday down to 39.83. So if it holds there, we can track back up. These ranges now, for those of you guys that are trading the S&P or NASDAQ, Friday was a good example, right? We broke and, NASDAQ specifically, and then turn around and popped 150 points and then break 200 and then pop 150. These are ranges ultimately that are going to suck a lot of people into complacency, into a sense of complacency. Now, if you're making money, good. Protect it. Take it out of your trading accounts. Properly fund your tax accounts and get ready for the next trade. Only look for easy trades. There are a few simple, easy trades. If you're talking about the NASDAQ, there are a few 65 handles to 130 handles, 195 handle swings every day. Just don't overtrade it. Don't push too hard. Let those trades come to you. And don't let your emotions get the better of you, okay? And then you'll be able to pull money out of this. And remember to not get married to a position. Do not turn a trade into an investment. The S&P is going to be the same basic thing. You're looking for 15 handle swings. The opening ranges, the NASDAQ opening range has been good. S&P opening range sucks. I wouldn't trade the S&P's opening range with my ex-wife's money at this point. However, the rotations are good. The rotations are very good. Look for equidistant swings like we got Friday. The equidistant, I tweeted it out too, live. The NASDAQ broke 195 points, 3 rotations lower, got up to the opening range, and I forget what the equidistant swing was. I think it was 29,000. Oh, I don't know what it was, but it was 195 points from the opening range, and we got it, and that was the high. My son Gabriel was long, and Gabriel's getting ready to go back to baseball in another month, or back to college, play baseball, train for baseball and go to school for another month. But for the summer, he's been working in an internship with a great company. I don't want to name it because it's a little nepotism, but he's also trading. And, it's what do you call it? A nepo baby. But he's doing a good job, I think. And
Nepo baby.
Yeah, but he's trading, and he's trading well. He came to me Friday and he said, "Dad, I'm long. I'm long NASDAQ from the first rotation." Okay, here's what you do. He ended up making almost $2,000 on that trade, and then I said, "Where do I take the money?" And I tweeted it, whatever the equidistant swing was. I said, "That's it. Take the money then." Okay, now what? Above it, and we got above it. Should I put it back on? No. You made $2,000. It's Friday. Preserve and protect it. Now go. Just go. Go do something. Go work out. Go have fun. Go, I don't know, go do something. Go play catch. Get the ball up here. Just don't complicate your day, right? Take those easy trades. That's the point, is take those easy trades and then go figure something else out. That's the hard work of trading, is to know when to do nothing. That's the hard work of trading, is to know when to do nothing. And these markets right here are telling you to take the easy money or do nothing. Okay, and these ranges are going to get bigger and better. Don't let these tight ranges lull you into sense of complacency, and be ready for anything. And you will be here long term, because remember, a good defense is paramount to a better offense, or to a great offense.
Yeah, I was just looking. Spain gave up 1 goal in the World Cup, fewest going to a tournament for a champion, and 7 shutouts is the most by a champion. So there's your defense wins championships, as the president is now presenting the trophy alongside the president of FIFA to Spain. So we can officially now at 6:30 on Sunday night say soccer is over. Thankfully, we can go back. We can go back to doing other things here, getting ready for football season in the next couple of weeks. But
did anybody see? Did anybody see the? I posted it. Shane Gillis, the comedian, talking about being at the Super Bowl. It's a great clip. He was in line to meet President Trump, and he was at the end of it. He said, it was great. And then at the end of it, oh my God, it was so funny. And he said, I'm standing there, and he points. He said to Ivanka, "Do you want to meet the president of soccer?" Which I thought was hilarious. And then he pointed to him. "You come here." The guy dropped his plate of food, came over, and Trump just kind of made him look like a schmuck in front of Shane Gillis. Now that's the guy that we called the president of soccer to get that red card reversed. I thought that shit was great. If you got clout, use it.
He definitely has clout. He definitely has the bully pulpit. He definitely has a lot to say. And in the area that he has the most to say right now is in the geopolitical sphere, and oil is moving. Crude oil front month up 3.25% to 84.42. As I mentioned earlier, December crude up closer to $80 now, kind of approaching again. It's a little above 79. Heating oil up 3.5%. RBOB up 2%. So what I was talking about last week was the implications of higher energy and higher yields are unable, or have a more difficult time moving equity indices in the week leading up to and the week including expiry week because of all that supportive positioning. But once we remove that, then some of these macro variables can matter a bit more. And so if we're going to be continuing to see higher energy and higher yields, I think it's going to be more difficult to see the equity indices holding on here. What we're seeing now to start the week is the NASDAQ largely flat. S&P down 12 basis points to 74.88. The Russell underperforming down about 1/3%. But I want to talk about oil a little bit more, because if oil is going to continue to see positive momentum here as the Strait of Hormuz is largely closed again, missiles are flying, and both sides now seemingly starting to attack both civilian and possibly power and energy infrastructure. The potential here for bigger moves across the energy sphere are higher. Apparently, there's going to be a headline tomorrow from the Houthis, possibly relating to the Strait of Bab al-Mandeb. Try saying that 10 times fast, which would close the Red Sea as well, and could really start to move oil. But Sarah, let's kick it over to you here for oil. I know it's been not something you've been wanting to trade just because of a lot of this overnight risk, but kind of stepping back and looking from a purely technical perspective, well, what are you seeing here?
From a purely technical perspective, it looks like gas prices are going to be higher. And why I say that is just because, just like we were talking about earlier about failing ranges, if you view last quarter as a range, again, you could be short below last quarter's low as long as we're below that. But if we're not, you can't, because how we know outside bars form, which is they fail one side and start coming through the other side. So yeah, it's looking pretty bullish. And, I think I don't remember if I just said this or not, but the line in the sand for the quarterly short was 68.56. And if you look on the daily chart, that turquoise line could not stay below it for we were below it for 2 days. So couldn't stay below it at all. And they've just been running off this bottom. And if you look at the monthly chart, they are trying to go outside month, which means take out last month's highs. Just like I was showing you on the quarterly chart, the same thing is true for the monthly. So if you view last month as a range, last month's high at 97 and last month's low at 68, if you can't stay below 68 and start coming back through, they're trying to go take out the high of that candle to become an outside bar. And even if they run out of time this month and don't go up here, wait a minute, don't go, where's my, even if we don't go up here this month, next month, you know, you're setting up for a possible reversal to still try and go up there. So they're trying to come back up is what they're doing. And we've got full time frame continuity on every time frame. So the year is green. I don't know about the 6 month. 6 month is green. 3 month is green. Month is green. All the time frames are green. So everybody is a buyer of oil right now. And that's just what it is. That's what it means when all the candles are green. You know, everybody's a buyer. All the different participants of different time frames, everybody's buying oil. And that's still true. And like I said, they're trying to come up here to last month's highs, which is at 97. I will put an alert on there. So yeah, ever since they took out last quarter's lows, there was no bears anywhere. And then the bulls said, okay, well, we'll take back over from here. And they've just been running. If the charts could talk, that's how dumb they would sound.
Farm for a while there in March and parts of April, it was easy to just look at the oil price and say where equities were going to be, and the correlations were inverse. Then for like a couple of days, they went positively correlated as the transition happened and oil started to fall and equities went higher. And then now again, are you thinking that oil can provide some color about the future direction of equities, or is it really kind of too early to tell here that if oil is going to really matter for indices?
Yeah, I mean, it'll matter, but whether we get back to that level of correlation, I don't know. I mean, I was off next week, didn't really look at oil. I was off last week, didn't really look at oil too much. But my sense would be that we're not there yet. But again, it'll matter. Yields will matter. Those things will matter. But I don't think we're there yet with the correlation. I feel like there are bigger things going on than just the war and oil that tend to matter a lot more. And that's where it's, you know, my opportunity to piss off the bulls, because I told the bears they were going to be pooping in a colostomy bag if they got too loose with shorts down into range low. But, you know, things feel very, very dangerous to me here right now. So while I say that, like, I'm not really looking to be short on NQ anywhere down near this kind of range low for now, I do feel like there are major risks, and I don't think they have a damn thing to do with the war, and I don't think they have anything to do with oil prices necessarily. Some of it maybe in Japan, I suppose, could, but I don't see that correlation there just yet. Like Sarah said, I mean, obviously this thing looks really constructive now. We now have a multi-week balance break to the upside here with this gap open. So if you're an oil bear, you're going to want this back into last week's range like ASAP, right? I mean, because if this thing fails back below, I would call it 81. I haven't updated these levels, but back below 81 or so, then maybe you can come back down and find some weakness. But you don't want to see this break sustain. You've got 1, 2, 3, 4, 5 weeks of sellers that are now offsides and are going to need to be covering. So up into this 87 and 88.69 area can be a little bit tricky, but I'm kind of with Sarah that as long to me as this break here sustains, we're looking at working back up last month's range. As she pointed out, we don't have to get all the way there this month, right? So that would be a 2-2, I suppose, from on a monthly basis from the Strats perspective next month.
Sir.
And go hit that target. And yeah, that certainly is not going to be helping equity markets, though I don't necessarily think we're there in that level of correlation. So I'd be cautious up here. I'm not super cozy chasing any of this kind of along here, but I do feel like if this break sustains, you're mostly going to be looking for longs on crude this week and probably next week.
Yeah. Pax, any key levels for crude, and then want to also transition to this bond market here and the crude impact on the bond market. We know the correlation is there, but bonds, despite the softer than expected inflation prints last week, bonds still look terrible. But let's start with crude. How are any key levels for you there? Any bias there?
Yes, I'm biased. I'm a biased man. I have biases. Crude has been a great trade. Last few weeks talked about the base that the crude was putting in at 67.5 to 68.5, and that as long as that held, we talked about that level, Sarah, that we bought a few months back, the lows of the year, 55.10ish. If we got back, if we took out 67.04, which is the low of this whole thing. If we took out 67.04, that would take us back down to that level. With all the uncertainty in the Mideast and what's going on in Iran and all that, and I'm just everything, that's not going to happen. So, just kind of logically thinking, that was a spot to have started to build a long position up to that very pivotal level of 77.77, talked about over and over again in the last few weeks. Again, if you guys draw a horizontal line on a chart, on a daily chart, you can see how pivotal 77 has been going back 10 years, maybe not 10 years, but yeah, for a long time, for a long time. So above that, we want to be long again, and then that takes us, we want to be longer, and that takes us to, it's going to be like 87 and change, and then up to 93. 93 is the 50% retracement, or the halfway back, between the high of 119 and the low of 67.04. So crude loves to attack those halfway back points. So I'd imagine that we're going to, not imagine, I am very confident. And if I'm confident, then I have reason to trade. If I have reason to trade and I'm confident in it, and what I think that crude is going to try to accomplish, then I've got reason to spend money in that trade. And that was, so, we're long crude, we're looking at $87, and then above that to 93, we get above 93, then we'll make our slow track back up, I guess, to all-time highs. It'll be another situation of, wait and see, trade what's in front of you. I don't know I was incredibly shocked and surprised that $100 crude didn't seem to have a bigger effect on the equity indices. So I don't think that $84 crude is going to have much of an effect on the indices. Certainly on bonds, if crude stays above 77, if crude stays above 77, anywhere between, at least according to Billy Bob Thornton in that TV show,
Landman,
that was a great scene when he explained, the equilibrium price. So anything between, like, I forget what the low was, but let's say 60 and 77, everybody makes money, and gas is cheap enough to where people can, relatively afford it comfortably. So anything above 77, I think, is going to be, is going to point towards a bond sell-off. It's going to point to and eventually drag on the S&P. The NASDAQ is already being dragged, but a drag on the SPOOs. Even if we don't go lower, it's just going to drag on the rally. So anyway, just be prepared for that. So bonds are starting to sell off again, and I think that would be kind of correlated to what we see in the inflationary trade, starting to rear its ugly head again, or handsome head, depending on how you see the market. And and that's going to inform everything we do. So pay attention and be nimble, be quick, use stops. Don't lull in a sense of complacency, and make sure that if you miss a move, who cares? There's a million other moves, and there's going to be always another trade. So sit and wait, be patient, don't chase, do not let your emotions get the better of you, and you will be here for tomorrow. You will be here for those trades that make your month, make your quarter, make your year, and change your life. But in order for you to get those life-changing trades, you have to learn how to be able to trade what's in front of you, remain patient. I hate that word patient, but remain with your feet on the ground. Right now, everybody, if you're not trading well or not trading much because we're stuck in a range, or you're trading well because we are in a range, or whatever it is, all of you need to be working on your daily routines. All of you need to be working on your mindset. All of you need to be working on your life. Because again, how you live your life is exactly how you're going to trade. And if you don't realize that, and you don't work on that, and you don't try to become more self-possessed, more self-assured, more self-confident in the midst of these quiet times, if you're not actively working on it, then you are not going to be here long-term. Make sure you're here long-term. Don't full port everything like you see people on Twitter do. The only people that make money every day are YouTube streamers. Pick your spots. This is the best business. This is literally the best business in the world. It just is.
One thing that Farm, I think you like to point out is, when an asset doesn't move in the direction of what the news would suggest, it kind of is like a red flag, or it's just a flag for you. And I would point out that the weaker than expected inflation prints last week, both in the CPI and the PPI, really had, very small impacts on the bond market. Yes, we did see removal of about a half a hike from the front end of the curve. And we saw a curve steepener, but 30-year yields are, almost back to the highs, right? And so despite that weaker than expected inflation print, the bond market is weak. And if I look at, just back to spot crude kind of being above 100 in March and for parts of April, well, the bond market, spot crude now is in the mid 80s, but the bond market now is basically at the lows, right? And so kind of the bond market is showing more than just energy is concerning it. And I think it's a combination of the energy and the sticky inflation, a hawkish Fed, but also the supply, right? We've talked about the deficit spending in the U.S., Japan, Europe, as well as the AI capex spend, and there is a lot of spending to have this build out. And if you look at the credit spreads of all the AI capex bonds that have come over the course of basically for the last 6 months, they're all basically trading at the wides versus treasuries, and so it's becoming harder and more expensive to fund this capex, and the bond markets are broadly exhibiting some exhaustion from that supply, in addition to kind of the long end of the oil market remaining, pretty big. With December crude back up at 79, the high in the middle of May was only 85. So we're only $5-6 away from those highs, despite being 30 plus bucks away from the spot highs. And so, got to keep an eye on this weakness in the bond market for sure. But the other area I wanted to talk about, Pax, you mentioned it a little bit earlier with respect to gold, but been trying to find this bottom in gold, and would have thought that the weaker than expected inflation prints and the fall in yields in the front end would have supported gold a bit more than it has so far. Gold's obviously a little bit weaker to start the week on back of the geopolitical stuff here. But Sarah, with respect to gold, how are you thinking about the charts here? What is the chart? There is a technical only perspective of the gold markets showing you here.
The dumb charts say down.
Dumb chart, say down. I like that.
Dumb chart, say down. And I was bearish last week on gold and silver. Silver did hit its downside target, which was to make new lows to that guy, which was 622's lows. So silver did it. Gold didn't, but I think it will. It's a little slower to get there. Now we've got this nice double bottom where a bunch of longs have their stops, which we're probably going to go take out. So the dumb charts still say down for me in the strat world. And then 3,900 basically for gold. It's 3901.3, but we'll call it 3,900.
Yeah. Pax, what were those key levels for you for gold again?
39.83. They won't change. 39.83. So side pivot. What are you laughing at?
You.
That level is just, it's one of the, you just go, you, all right, well, fuck it.
You. 39.83 from Pax.
39.83 is that pivotal price going back to October of 25. So I want to be long there and short below it. But the August pivot, the pivot for the Augie contract is 40.78. So I'm short there. The swing completes at 39.83. I do think gold's got more downside. If we've got 39.83, which is just a hugely supportive level, pivotal, and then underneath it, we don't have a pivotal level until 37.75, but we've got a lot of places to take profit and add to. 35. I mean, if we take out what was the low, 39.53 or 39.55, we take out that level, and that's where crude is going to fall. Gold is going to fall apart in, and I think that can happen. But like anything else, right now it's kind of holding in there. It's holding in at 39.80 and just kind of trading around. What is the catalyst that's going to break gold? Whatever the catalyst that's going to break gold underneath that level is going to break bonds below 110.15 and then 109.16. Whatever the catalyst that's going to do that is going to be the catalyst to take crude above 87 or 93, back up to, to the 90, to the $100 barrel, range. and it's going to take the S&P back down to 26, 27, or the S&P down to 27, even 2650, and the NASDAQ back down to, I'm sorry.
No, stick with it. Yes, I love it. 2650 S&P. Yes. Let's go.
But getting the spruce, who down to 7050, so whatever catalyst is going to break is going to break gold, break bonds, rally the dollar, break silver, break NASDAQ, break S&P. Whatever that is, I think we're going to see it soon enough, and when it does, be prepared for it, because those are big trades. When we come out of ranges and all of the markets are moving together, those are the kind of trades that will make your year. You have 3, 4, 5 of those, you put together a decent year, you take the money out of your account, you protect it, and you properly fund your tax account. You'll be here for continuation. Does that make sense? So look for 1800 in gold, Pippi. God forbid, but okay, stranger things. Pippi keeps trolling me with that level. Even in my room, in my trading room, we talks about the 1800 gold. We'll all make a ton of money, but we better be buying a lot of gold on the way in, because our paper money isn't going to be worth shit if gold makes it down to 1800. We'll be the new Weimar Republic.
That would be interesting. To say that we have to buy a lot of lead also.
Yeah,
with bullets.
I need more lead. I was thinking that this afternoon when I was driving home from the hotel in the city. I need to go. I need to go get more ammo. Yeah. Anyway, whatever that catalyst is, I think we're going to start to see us to, whether it's the war or it's inflation or it's something else.
Yeah. No, for sure. I think it's hard. It's always in hindsight, the catalyst is obvious, but in the moment, it's hard to identify what is actually going to be the thing that kind of creates these cross-asset, highly correlated moves. But if you're looking for a few things this week, I mentioned earlier, the macro calendar in the U.S. is a little bit light, not really a ton going on, and we are in Fed blackout period, which is nice. There is a 20-year bond auction on Wednesday, and Google and Tesla report after the close on Wednesday as well. But one thing that could move things is Thursday night is Japanese CPI, and not that I am some sort of expert in this, but if you think about one of the asset classes that has been incredibly weak, it's been the yen, kind of breaking out to 40-year lows versus the dollar. Tremendous pressure on the yen because of the deficit spending, because of the pickup in inflation, because of the imported energy issues given the war. And so if you started to see a scary print come out of that inflation print later this week, there'd be more pressure on the BOJ, which is meeting at the end of the month to raise rates. And that's the kind of this carry trade unwind. FinTwit is talking about it again because of the analog back to the July-August period of 2024, and people have that kind of recency bias. It's possible that could happen. I think more likely we're going to see is continued yen weakness through this that will allow the carry trade to get even bigger. And then at some point when it unwinds, it will be a problem. I'm not sure it's imminent, but definitely something to keep in mind on. But 10 minutes left or 8 minutes left here before we get to the crypto closeout with Trader Main and Ponzi Trader at the top of the hour. But Farm, Pat's just talking about kind of all these asset classes, maybe poised to move. Is there one of them or not that, as you kind of get back into the seed, that you're thinking may move before the others, or one that seems more poised than not to kind of dictate the next direction for assets, broadly speaking? Or are you kind of really just thinking more of it's this chop, it's this back and forth, this trend until, we really do need some sort of news breakout catalyst to shake things up?
You mentioned USD/JPY. I feel like right now it certainly is at a pivotal decision point, right? So I had posted this chart a while back. Does this range break and sustain and go on a big run? Like you said, at that point, carry trade potentially accelerates, right? And that's not necessarily bearish equities. And then you look at NQ sitting at range low. Do we get a failed break of range low? The yen goes to zero, max bid NQ again? That's possible, right? And that could be a big, easy trade. Pax talks about, taking the easy trades. I like my trades like I like my women, big and easy for sure. So I'm all about that if that's the way that it goes, right? If the yen does pop, though, if something changes, I mean, the parallels to 2024 are pretty similar, right? With the dispersion, we're being at max dispersion here, max carry. There's some stress in the basis trade markets here. And the BOJ's got to do something. Nothing they've done has really worked. So we just also got some weak U.S. data, right? That's exactly what happened in 2024. I don't remember what the print was, if it was an ISM or whatever it was.
Payroll print.
And I feel like MOF just, BOJ pounced on that, right? And so I feel like they're opportunistic. And if we get another soft print, they get a strong print. I mean, who knows? So I think we have to watch it. I don't know if it's imminent. But I do feel like if this break fails and you get some weak U.S. data, some stronger data out of Japan, and they pounce on that, it could create some trouble, and maybe that gives you the NQ breakdown. So I feel like NQ and the yen are really top watch for me. I mean, we talked about gold. To me, it's just a 4-week balance range, sitting in here, dry humping the lows, not doing anything. And I think it's waiting on some of those other asset classes we talked about, right? Is it the yen? What direction is that going to go? It's going to have massive ramifications. I mean, because to me, measured move up towards 180 on USD JPY if this break can actually sustain. And we saw in 2024 how fast this can come back to range low in the 140 range if this break fails and they pounce on something. So those definitely have to be on. I have to look at them every day. I'm not like trading. I'm not like using a 5-minute chart on USD JPY to trade NQ or anything like that. But big picture, we've talked about. It's the major technical moves, the large breaks that matter when it comes to the dollar, when it comes to yields, when it comes to currencies. That's when equities care, right? If it's just kind of choppy, grindy, it's up a little bit one day, down a little bit the next day. It doesn't matter that much to equities. They're going to do their own thing. But the major technical moves absolutely will matter. And this is one I just don't think you can take your eyes off it here just yet.
Yeah, and the window of potential weakness has reopened right after expiry week. The bar for news cross asset wise to matter is lowered because that supportive positioning is at a much reduced level. And so if there was a time for the macro data to overwhelm, it would be now. It would be the next 5 to 7 trading days. If it doesn't happen in that period of time, we could tuck it back in and start to worry about other things again. But we're in that. We're poised here for potential for some of the cross asset stuff to matter more. So we'll see what happens. But just a couple minutes left before we get to the crypto closeout. So let's close on the Bitcoin. I feel like the last couple of weeks we've been trying to see constructive price or we've been seeing constructive price action. Although I think our eyes are always on some of those lower levels that were last seen during the summer of 2024 as the president was endorsing Bitcoin at the in the campaign run. But Sarah, I'll kick it over to you for the Bitcoin here. What are you seeing?
The Bitcoin's not doing shit. Dumb charts. It's stuck. High, low. We've been stuck for a couple of weeks. I'd like to see it still. My drawing still stands. We're just going to scoochie it over because it's taking forever. So I'd like to see him go take out these highs and then see if we get a reversal back down. Otherwise, we're just chopping around in this range from 67 to 57. So it's a $10,000 range, but just stuck in it. So nothing too exciting going on here.
Pax, any
farm? You've got
Pax
Bitcoin charts.
Yeah, any farm, any or Pax, any love or hate for the Bitcoin here?
I love Bitcoin and I want to be long Bitcoin. And I am long Bitcoin, but I don't want anything to do with this market without momentum. So again, I think I've been saying this for months and months. I don't want anything to do with Bitcoin. I'm not going to add to my positions. I'm not going to take anything off between 49,000 and 70,000. I know it's a big $21,000 range. But I'm not going to add to it until we get above 70. And I'm not going to pitch them until we get below. If we get down to 50, I'll buy some and I'll pitch them underneath 49. But, Blake said a couple weeks ago, it's a bear flag inside of a bear flag inside of a bear flag. So I don't know. We're just sitting here. I don't know what we do here. I'm looking to buy some other. I would like to, before we start to fall apart again, I would like to buy some other crypto. So I'm going to listen to these guys in the next show to kind of get their to render their opinion in it.
Yeah. Farm, last word to you at the risk of going into an X-rated soliloquy. But what's your final thought here on? I think you refer to it as the butt coin. Also, often,
the butt coin. Yeah, no, I mean, it's been flirting with, hilariously, my stop when I took that long from 60 to 100 in 2024 was 57.5, and it's just sniffing that right now. But I did just get a new plan on the butt coin. I had no plans on trading it, but as soon as PAC stops out under 49, I'm 48,999 bid. So that's the fucking plan for sure.
There's
for
my
sure.
arc. You're there. He's there. He's there for me when I need him. I used to say shit like that to the guys in the pit when I know we're coming to the end, but like if I was short and pressing him, and everybody else in the pit was buying him in my face, and I just kept loading him up, thinking, all right, when am I puking? Trying to look as confident as I could. When the market would start breaking, I just say, I'm here, lower half bid. For all of you jagoffs, I'm here for you. Just like that. That was a great line. Thank you.
I think I called it jackoff. I love it.
I think there's probably no better way that we could end the program than to start calling people that. But thanks, guys, for another great Sunday Open episode. Let's kick it over to Trader Main and Ponzi Trader for the Crypto Closeout. Let's get cracking.
Hey.
Hello.
Hey.
How are we doing today, sir?
Oh, dude, just chilling on a boat right now. What about you?
I'm stranded in the middle of a lake with no power and
You getting straight up
no
Hormuz?
internet. Yeah, you should long oil. There are boats everywhere. Don't believe.
So you are Citrini Research's intern, huh?
I'm intern number 4. Yeah, they sent me out to a lake though, and they told me Starlink was going to work. They told me there'd be power. Both were a lie, but we're still doing our best here. Welcome to the Crypto Closeout. I'm Trader Main, my friend Ponzi Trader here, and seems like our pre-show friends here are kind of bored with Bitcoin, and I kind of agree with them, man. Like nothing's really happening. Like we're kind of just still in this bottoming range. And I'm not really interested, similar to what they said, until we get another dive lower or we actually see some constructive market structure, at a higher level here. Like, I think we're just kind of in these summer doldrums. And yeah, it might go up a little, might go down a little bit more, but I think things don't pick up again, honestly, until September.
I'm kind of on board with you, brother. I haven't been trading Bitcoin at all. I've been having fun with the volatility that we're seeing in these futures contracts for most of these indices. We're getting some serious swings in both directions, and also memory's down 50%. So it's been a pretty fun trade there. But as of now, there is starting to be some slight entertainment in the crypto verse. Pump Fund is up 20% today, which is
we did shield this last stream. We shielded this last stream.
No, I think we anti-shielded that.
I think we shielded it.
Yeah, because
we talked ourselves into being bullish though, based on the chart. We were looking at high time frame. We're like, this thing looks good.
We did, but the unlock scared me.
I'm taking the clout. We shielded it. We talked that we said it might go up or down, and it went up. So I'll take full credit for that.
How it looks like our good friend Litcoin. You remember that one?
Yes, I do.
So let's recreate that chart here. This looks
aggressive
like
sell-off, less aggressive, sideways,
upways
structure
now,
break.
Right? Oh, I thought you call it upways.
Yes, actually, you're right. Up here in Canada, that is what we call it.
Yeah. So now it's looking like, bold claim here. This is a pretty good spot. I'm long already, but very small size. I thought I'd get a dip into open. 2, invalidate at the lows. Oh my goodness. This is such a high beta asset. It's 36% to the lows.
That just means you size bigger, right? Stop loss further away. It means go even bigger because you need to make more money. Yeah. That's
exactly how I traded in 2022. Exactly how I traded.
And you're still alive somehow.
I'm here. This is the setup for the month, I think, for the fall.
So for you futures guys who might be holding over from the last show, Bitcoin either just has to go sideways or up, and then altcoins can really party. Like those are the two kind of market regimes. And right now, Bitcoin's kind of sideways, kind of bullish, which allows you to get these kind of disparate pumps in altcoins where they can go up 20% in a day and Bitcoin's kind of flat over the last 5 days.
Yeah, as we look at the current list of assets in terms of their highest changes on the day, it really is garbage coin. No offense to anybody who's watching this show who holds any of these tokens, but these are the kind of the conditions that we need from BTC to have fun in alt world. Besides alt world, have you actually, I know the answer, but I'm going to ask it anyways. You have not been participating in the Robinhood chain, have you?
No, but you know what you did say that was actually kind of playing out right now is when we had, I think this was maybe 4 streams ago, you'd mentioned, you're like, I don't like the fact that basically the garbage equivalent of the AI memory stocks are the only ones pumping right now. It feels like end of cycle stuff. And since that stream, like MU, SanDisk, Bloom Energy, like everything's nuked, like pretty hard. Now the question is this a leverage wipeout? Crazy stat: 1 in 30 working adult aged Koreans got liquidated over the past like week on this down move. So if you think crypto people are degenerate, you're wrong. Koreans put us to absolute shame. 1 in 30. It was some crazy number, like 300,000 people got liquidated. It was like billions of dollars. Now, is this a leverage wipe and then this trade keeps going? Or do you think that maybe like a lot of this stuff broke structure, in my opinion, like high time frame?
Absolutely. But that leads you to, you can still get a dead cat out of it. Although you may argue that this was the dead cat here. But what I do love to see is that we're down 61% from the highs. And if you know why the 61% number is relevant to anything trading related, Dylan, can you go ahead, Main?
So 61.8 is one of the Fibonacci retracement levels. So
that's right.
I don't know if you're into the woo-woo of it like I am, where it's like, okay, these Fibonacci ratios and numbers are in our DNA. They're in nature. They're in architecture. Therefore, humans psychologically were like attracted to these numbers. Or is it just a scary enough of a pullback, 62% of the move, to make people kind of poop their pants before the bounce? My question, I guess, is stuff is down enough. There's a lot of late people coming in to this market. And there's also a lot of people who were up way more on this market than they were just 2 weeks ago. So like there's people who are like, hey, I'm early to Micron. It's like, okay, but that P&L, you just round tripped a ton of UPNL. So there's an argument to be made that any dead cat could aggressively get sold into.
Yeah, I could see that truthfully. Honestly, Micron looks garbage. No matter how you draw it, I think Micron looks really bad.
Dude, the weekly chart on Micron, SanDisk, Bloom Energy, like all the big names basically broke weekly structure. So it's kind of like butt clench time. It's like this is either the low or yikes.
Yeah, I mean, look, this weekly on SanDisk tells me at least some relief up to like 16, 13. I'm actually long, but very small size. So I'm cool with adding. I do think we see relief. It's whatever comes up so fast will also go down so fast. But
yeah, that's the law of thermodynamics, right?
That's the law of corporate. Yeah,
Gandhi. He didn't eat until it was proven that E equals MC squared, something like that.
Exactly.
Very scientific stuff. Very scientific stuff. So I have not been playing on Robinhood chain. I know you have. My view as an old man who doesn't go in the trenches is basically Vlad came out. They partnered with Lighter. They're like, hey, we're going to now have our own kind of competitor to not just Hyperliquid, but Solana, right? And where you can have, he's been very big on real world assets going on chain. But of course, us crypto degenerates are like, let's get meme coins on there immediately. I think we talked about this last time. This was like the original name of Robinhood was Cash Cat. So this pumped, he's tweeted about it before. It drew down 80, 90%. But now there's tons of coins being launched over there. But it seems to me to be no different than the trenches on Solana, which it's like, a mass casualty, just fest of stealing each other's money, hot potato of liquidity.
That's a fair way to put it, but I mean, that's how it's always been. Really, like trading these meme coins is like trading stocks in the 1910s, 1920s. It was like PvP, and so this is equally as PvP inefficient.
You know, I was alive back then. That's how old
I
I am.
know.
Crazy.
Yeah, it makes a lot of sense. You know what I mean?
Yeah.
But anyways, I think that Cash Cat is actually making good reversal after being down 80%. A good statistic on the distribution of Cash Cat, it was like really, really, really egregious distribution. That what that means is that a lot of early traders had like a solid supply of the token, and it actually sold off most of it into these lows. That kind of shows us what an 82% sell-off looks like. And I don't think Vlad nor the team are going to allow the chain to die. And, as you get to see this volatility whenever he tweets anything about the word meme, Cash Cat's kind of like the blue chip of the chain so far. As outside of that, there has been one kind of fancy project called Index, which you can see where Vlad followed. It's the kiss of death. Vlad follows the asset, it pumps 300%, and then immediately sells off. Now it looks kind of distributive. But essentially, it's a pretty cool Ponzi that uses all the trading fees to buy stock and distribute stock to its holders. So, like, I've collected a few $1,000s in the Mag 7 and
is
so
this
forth.
the one that our friend Eric Veely is getting super rich off of, or is that a different coin?
No, that's Tendies.
That's Tendies.
Yeah.
That's not Robinhood Chain, right?
No, it is Robinhood Chain. Yeah.
Oh my gosh.
Robinhood Chain is kind of hot. I mean, look, dude, back in the day, this would have ran to $1 billion plus. You know what I mean?
Well, so he did tweet out the two wolves meme, right? Where he's like, because I think he was like, "Hey, we're a super serious business," and everyone's like, "What the hell?" Like, all the volume on your chain is memes. So he kind of backtracked and he's like, "Hey, we can do memes and RWA."
Yeah. I mean, it's like total headline risk. It's whatever he says goes, and you got to be ready to swing in either direction with extreme volatility. Besides that, what are your thoughts on Bitcoin from a lower time frame perspective? Anything to come out of this week?
I think we do have a couple of earnings calls that I think, could potentially move the needle. I think the biggest risk for Bitcoin right now is some sort of sell-off in the S&P or the NASDAQ, which kind of are just holding below resistance right now. If that happens, I think Bitcoin probably wipes. I'd be interested in the low time frame long between 59 and 60. That's kind of the area where I'm looking. If we get a retest there, I could see 59 to 60 get tested. Then I could see a move up above 70. If we don't get that and we just get a move up from here, I'm looking to fade any sort of significant rally because I do think we still get one more retest of the range lows at the very least.
Yeah. I mean, NASDAQ don't look too pretty, and neither does the S&P.
And dude, like this is arguably the most escalated Iran has been in some time. Like 2 U.S. soldiers, I believe, were killed in Jordan, I want to say.
Yeah.
They're talking about a ground invasion into Kuwait. The Iranian government is warning the UAE if there's any sort of retaliation from the US, they're going to take out the airport in Dubai.
Yeah.
So you could argue that, this escalation could lead to some sort of market-wide wipe if something happens, if US gets boots on the ground. I have a feeling this war is like another, and I said this a long time ago, like this is another Afghanistan or Iraq. Like this is going to be a multi-year quagmire that just doesn't end.
I wasn't trading back then. Can you tell me a little bit about what happened back there in terms of price action on stocks?
Well, if I remember correctly, after the World Trade Centers fell, you Americans went over there and kind of started just to flatten shit. But that was like post.com bubble. So we arguably had a pretty decent bull run kind of after the initial Afghanistan, war. I don't think, I don't want to trade a market
Is this that time period? Is this
this would be right. 2001 was when the World Trade Centers fell. You guys were in there by the end of the year.
Wow. And then oil trades from 15 to 150 in the next 10
years. And what's
years.
the date on that top?
2008.
Yeah, there you go. So imagine this oil crazy rip we just had. Rips a little harder, then we have a repeat 2008. Everything explodes. We all die.
Wait, so are we
hot
theoretically right here for oil?
I think more than theoretically. I think physically we're there.
Very good. So that means this jet I just bought, I'm not going to be able to fly because gas becomes too expensive.
No, but you can live on the jet.
I didn't think about that. I can sell the house and live on the jet.
Yeah,
we are coming up
on the jet.
On the 15-minute mark. We've got an exciting guest for you here today.
Can we get a shout out? Happy birthday to your pooch.
Oh yeah, it's Lucky's
birthday.
Was it
today or was it yesterday?
No, it's today. My dog.
Look at me. What a good friend I am.
He's a 15-year-old legend. One day we'll bring him on the show, but for now, today we have Spuno Sounds. Spuno Sounds, welcome. How are you, brother? We got a face reveal.
We got the face out there. How's it going, guys? How are we doing?
That's crazy.
You're doing good, dude. Good to meet you finally. I know we've talked a bunch in the past.
Yeah, talked quite a bit. Yeah, face reveal. I mean, no, I used to stream with my face camera, so I mean, it's out there, and I've done a few things. But yeah. What's going on, guys?
Dude, of course you're young. How old are you? Though you don't have to say the exact age, but I'm assuming early 20s.
Dude, no, I'm actually older than I look. I'm 27. So yeah, I don't know. I feel like I'm young though in like the crypto world, I guess, and like I still have a lot to learn and whatnot. But yeah, I'm 27.
Tell us, 27 is middle age for crypto.
It is.
Yeah, sure. I have aged a lot.
You're right in the middle. Yeah. You're right in the middle.
About 2 years ago, I looked 6 years younger. So yeah.
Nice. Tell us a little bit about your give me like a 60-second background context on what got you into trading, how long you've been trading, and what you're trading now.
Yeah, so I've actually had like a crypto Twitter since I want to say like 2018, 2019. So I've kind of been like tapped in and more so just like poking around and looking around and what's going on. And then 2023 was when I maybe started tweeting a little bit and then kind of like started to dabble a little bit more, started to put some of my paycheck into some bear market coins and whatnot. 2022, 2023. And then yeah, I the thing that changed it like the most for me was when I saw a meme coin P&L from someone like, I think it was like on Bowden or something. I saw someone turn like one soul into like 40K. And I was like, what am I? I think it's Barkery, if I'm remembering correctly, if that's his name. He doesn't really do much anymore these days. But anyways, like I kind of like switched gears from like, okay, I'm collecting, Chainlink and Bitcoin. Like, let's start gambling, or I guess going a little more risk on with some meme coins. And dude, I hit it off pretty well and started doing kind of like pretty well out the gate, like late 2023, early 2024. And yeah, found my way through meme coins and eventually started streaming and built an audience and community and whatnot. And here I am today.
What's your current take when you say today on this price action?
I don't know. I think current price action, I don't hold anything. So I exited a little bit late. I think I closed most majors positions around Bitcoin like 92 or maybe 91. So kind of just like towards the end of the top there. And then
pretty good.
I just like had a so for me specifically, like kind of like left curve, if you want to call it, like I just have no reason not to believe in a 4-year cycle. So I at that point kind of reverted back to my original thinking I had all those years ago of 4-year cycles intact. It does what it does. We topped at October of whatever 2025. So 2024. Anyways, yeah, like I just don't hold anything, and I'm excited to buy things though. I think we're getting really close to that point, and I'm still just going to be a believer in the 4-year cycle. And maybe we bought them a little bit earlier, and I have to buy a little higher or whatever. But yeah, excited to start getting back in there and buying some spot bags. So other than that, though, just on chain.
Are you? Yes. Are you trading? I saw you were trading perps for a little bit. Are you still trading perps, or are you back on chain?
I mean, the perps thing was kind of funny. Like I had no plan to trade perps. I was actually just going to take a break from meme coins and like low cap type of stuff. And I just deposited like 20,000 into a hyperliquid account and ended up doing extremely well. And I actually was trading on GMX back in the day. Like, believe it or not,
no way.
I that was like the first ever experience into perps. And like I had like I'd like started kind of building some knowledge like way back in the day on GMX and trading leverage. Didn't ever play with size. Like, I was doing like $50 swings or whatever. But I actually got like an $1,800 airdrop from Arbitrum because of that. That was like the biggest payday I ever had at that time. But anyways, like, no, not right now. I'm not really trading much perps. I mean, if there's something set up and I think looks good, like I'm kind of looking at a Bitcoin short right now, but not too attached to it. I'm not
what do you feel like are the similarities between trenching, trading meme coins, and trading perps? Did you find like some of your skills were transferable? One's harder than the other? Do you like one better than the other?
Yeah, I think perps just take a lot more pre-existing knowledge, or I guess like there's just so many different like avenues you could take with perp trading. Like, you could be a very fundamental trader. I mean, sorry, you could be like a very trend line trader or whatever. Like, there's just so many different types of perps traders. Whereas meme coins, there's really only like two types. You're either scalping or you're holding moon bags, really.
And what do you do?
I do a little bit of both. I've actually been getting torched like holding some bigger sizes recently. I found the most success like early in my meme coin stuff was just like the low cap scalps, just like kind of 15-minute time frame to an hour trades. And recently I on Robinhood chain actually decided to play with some size. I put like 30K into one coin and I think I lost like 25 of it. So
what coin was that?
Dude, I don't even.
That's exactly what happens. It's like as soon as you're ready to take a swing.
Yeah,
Dude,
yeah. So I normally
time.
just don't play with like big size like that. I just felt like pretty good about it. It was called it's called Repe. It's just, dude. Now that I think about it, like hindsight, it's just such a bad coin. It's like a Robinhood Pepe, whatever. But it didn't go well, and I mean, it's just part of the game, and chalk it up. So.
Exactly that, dude. I mean, I got to tell you, the trenches have changed a lot since we were, and I say we, I don't know if I'm speaking for you two here, but when we were really hot and it was easy, the tooling has just become so aggressive for the PvP and the short time frame holds. Like nobody has the risk appetite that we had back then to hold stuff up to 500 million or $1 billion. Like there is no faith in the trenches. It's just maximum extraction. So I'm surprised that Robinhood chain has even made it this long. Truly.
Yeah.
Like I can't even tell you. I mean, it's only been, how long has it been? 2 weeks. And I'm surprised it's not zero. There's still people here playing the game.
Dude, I think it's the highest one on Robinhood, 100 something mil.
Yeah. It hit 220.
I just think it's actually built out like as quickly as like it developed a lot quicker than Solana did back in the day. So like it just has everything already that you would need for it to be successful. And I think but if you really think about it, like there's really only like 5 coins that have kind of broken that 10 mil mark and are doing well, or I guess still kind of above 10 mil. So
all 3 of them.
What happened to the Brian coin, Ponzi?
Oh,
what was the deal with that?
May I check this out? So Jesse steps down from base wallet and like base ecosystem, but is still involved in Coinbase. Kobe takes over. Brian, in the nature of trying to get people excited about the chain, ends up changing his profile picture to the cover photo of this coin, which is Superman base Brian coin man guy, him base Coinbase man. And with that, instantly the token goes from, I don't know, it was like sub a million.
400K,
yeah, it was like 400K to 33 million. And on top of that, I follow a few wallets, and I knew like it was kind of going to zero because I knew like 5 guys that had 2-3% each. So I was like, oh man, they're really risking it for the biscuit. And then of course, Brian changes his profile picture right here, and the coin legitimately just melts, absolute melts. And you may say, okay, that's not fully Brian's fault. But at the same time, Brian shouldn't be encouraging people to play the game by making his profile picture that of a coin. And you can say, oh, he didn't know, but like everybody in his circle is going to tell him, hey, what you're doing. Yes. Yeah.
I called him out on the Balaji thing. Remember that? Like that was right at the top of the market. It was like August 2025. He tweets out he's buying Balaji coin, which was like a 5 mil market cap coin, or it was 2 mil, and it like doubled the 5 mil. And I'm like, Brian, like, what part of the cycle are we in where you're shilling a 5 mil topper? And he like, Balaji is a genius. You can now own part of them. It's the whole creator coin narrative. I was like, dude, you know this is a shit coin. Stop acting like it's not. It's going down to 99% immediately. And I don't know. I ratioed the hell out of him. Because I just thought it was
And it
silly. It's
did.
like, dude, you know, the only reason people are buying this is because you publicly just said you're buying it. And if you're not going to ever tweet it about it again or support it, this whole because I feel like they didn't even try with the creator coin stuff.
No,
like,
dude.
hey, maybe this is
it's
a
the same thing
thing
that they did a few days ago. They didn't even try. Like they had the chance to do something cool, and they just let it die.
Yeah.
And now everybody on base chain hates them. And
it is funny, the comments, because there's people that are like, Vlad, there's a 3 mil runner on your chain right now. We need you and the team to get behind this, bro. I'm like, God, these people, it's so funny.
You know exactly.
Just another world.
Return to the mean, though, right? Like no one had faith in base chain, or I mean, people do, but it's return to the mean.
I have more faith now. I think Kobe, if anyone can turn this thing around, it's a guy like Kobe. But you know, Ponzi's on the inside of Kraken in a way similar to me. It's a big role he's taking on. It is a really, really big role. I think he's up to the challenge. But yeah, I could think of different things I would want to do after getting $375 million than run base chain and all of trading at Coinbase.
And it's also walking on eggshells. You know what I mean? Like there's pretty much every decision you make, there's going to be a lot of people unhappy. And especially when it involves an ecosystem where everybody's intent is to just gamble and speculate on tokens. So like there isn't really a world where people are going to be like, you're making the best decision for the chain regardless. You know, I would say that maybe the smart decision was to say, hey, Brian, just a heads up, like if you make this your profile picture, a lot of people are gonna, you know, pump and dump that token. He's like, all right, maybe I should take it off, right? So like, what's the right thing?
It's a bit of an unwinnable game because I just don't see these centralized exchanges winning the perps game anymore.
Yeah,
I just don't think it's a thing. No one wants to trade on a centralized exchange where there's geo blocking, there's all sorts of limitations when Hyperliquid, NADA, Lighter exist.
Yeah. Spuno, are there any coins right now in the trenches, or I guess perps either, that you're looking at like, oh, I would either long this or short this, or like there's something to be had there?
Man, like I said, like I think I'm looking at a Bitcoin short. I don't know exactly what I want to see or what level I want to see, but it's just kind of very abstract. But I'm looking at that like into new lows. I think just Bitcoin eventually will find some new lows. So hopefully trying to catch that. Other than the trenches, like man, I've been pretty rinsed like the past like 2 weeks. So I mean, I have ammo and I'm ready to go, but I'm not like trying to catch any bottoms on anything, like even Cash Cat or Tendies here. But even though like I do think Tendies or Cash Cat, like one of them, I think does have the opportunity to go a lot higher.
Yeah.
I do see like blue chips on Robinhood kind of sustaining and lasting longer just because of the verticals that they have. And if they want to continue to, you know, not necessarily promote, but just keep building out Robinhood chain. Like these memes, some of these memes like have to succeed. So I think there's something there.
It's good for them, dude. They want the volume on the chain. They can proudly say, oh, look, we flipped Solana or we flipped, you know, Arbitrum, whatever it is. So they want speculation, but they all same situation where they have to be careful with what they do specifically and what they list and what they get involved with, because probably a lot of scams involved in the middle.
Yeah.
What do you think of this Ansem chart?
Ansem, let me take a look real quick. I was actually in the woods all weekend. I didn't have service for the past 2 days.
This is where it should bounce if it's going to. Like it's the initial impulse before the all-time high.
Yeah. This is actually a fun one because like, dude, like I feel like someone like him, not necessarily like is gonna put a bunch of money into it, but I just think like someone like him is just so well connected and like knows the right things to do in these scenarios, especially holding so much supply and what he can do with that. So it's interesting. I mean, it's testing. It's like kind of ranging here, but I mean, like it's just all memes. They've been topping very quickly lately, and it's just it's tough in a bear market to really send things, but I think there's a possibility there for it.
I would take this trade. As a matter of fact, I did buy a little bit. But it's just good RR at the same time. Like, I don't have a hard stop in this scenario, but obviously if we just start to close below these lows, it's like an easy in value. Like, all right, well, that's not trading up. And then from the upside perspective of it, that's like, 60%, right?
This is the Bitcoin
Yeah,
at 6K trade. It's either this is the bottom or it goes down another 50%.
Yeah, Spuno, were you trading BTC at 6K pre-COVID?
No, I was not. I beat myself up many times for not just buying and holding. Really, I mean, I'm sure a lot of people have, but no, man, I'm pretty new to trading. I would say, like, really, like, playing with anything of relevant size, like, only the last like 3 years of my life. So, no, I wasn't there.
The famous chart, dude. Look at this. This is exactly what it looks like. Man, I love how your brain is just etched with this memory. This is where Anson is right here. It doesn't mean it has to break down, right?
50% down.
Dude,
this is the highest RR spot. Like, it's either gonna nuke or like this is the floor.
Wow.
Bouncy ball.
What was the catalyst there? Do you guys even what happened?
This was COVID. So
gotcha. Okay.
Yeah, this was not like, COVID. COVID was the second drop.
Oh,
after the 14K run.
This was COVID.
This was just the end. It was just the end. Like, it just.
Wait, when did BitMEX break? Did BitMEX break here or on COVID?
COVID, right? No. That was COVID.
COVID. Yeah.
This was just like the bear market, right? Like, it's the 4-year cycle, bro. Like, the bottom was in a few months after that 4-year cycle low.
Oh yeah, I know exactly where this was, dude. I was still in college. That's so funny, dude.
I was actually buying Dogecoin at that time. I was early to Dogecoin. That was actually my first big trade. I don't know. I made my aunt like over like 100K. Like, she put in like a few $1,000s, and I only put in a few hundred or whatever, and I sold early. And but yeah, I was buying.
Did she sell?
She sold a little bit. I don't think she round trips quite a bit, but yeah, she made some money. So it was pretty cool.
Spuno, this was the most epic trade in human history for crypto. What happened was COVID crash, BitMEX. So everybody was trading perps on BitMEX. Like, BitMEX was the hyperliquid of obviously it was a centralized exchange, but it was like the venue for trading crypto and perp specifically. BitMEX actually shut down the exchange at like 3,800 because there was no bids in the book. Between like 3,800 and zero, there was like 750K. It was just
crazy lore. You could see zero on the order book.
Yeah, you could literally like if you just looked at the order book, there was nobody in there, and so you would actually technically you couldn't get liquidated, and the funding was insane. So it was like the most. This is where Salsa Tequila made like most of his money. Honestly, I had him on notifications back then, and you could put on 100x long and not get liquidated. So from that moment until a year later, BTC goes from like 3K to 60K. Yeah, that was like the memory trade of last year that I completely missed.
I remember like the euphoria, even from the sidelines, just like every day, Bitcoin new highs, Bitcoin new highs. So,
did you catch any of this? Any of the SanDisk, Micron, memory, like any of the stock stuff?
No, I made a pretty good swing trade on Pang though recently.
Oh, nice.
Let me take a look here.
Well, by the way, we just lost Maine. He's in the Strait of Hormuz, and his boat just got shot down. We'll probably see him on headlines. But yeah, you're stuck with me for the rest of the show, another 25 minutes, and you're actually replacing the Canadian. So
there we go.
It's a good luck charm. But yeah, where did you catch this?
Yeah, let me pull this real quick. I can't share my screen, but it was I think it was like less than a week hold. Or I bought at $59 on Monday, July 26th, or sorry, 2026. Yeah, Monday. Sorry, what is that date?
Oh, nice. And then you caught it up to like 88.
And I sold out at like maybe like a little bit. I think I trimmed a little at like 79, and then I kind of sold the entire bag at 85-ish. I was like, dude, that's almost a 40% move on spot.
Nice, right at the top.
Yeah, so it worked out pretty well. But I beat myself up so much for not taking all my meme coin profits and just putting it into the stock market. Like it's pretty tough watching from the sidelines.
Pulled millions of dollars out of the market last year, and I was like, fuck, stocks are cooked. I had this thesis, and this is like one of those biased things. I had a thesis last year where the first quarter of 2026 was going to be like a drastic economic collapse. And I quite frankly watched the opposite happen. And I was so married to my bias. And then you had memory trade. From the beginning of the year, SanDisk was at 170, now it's at $1,300. Like I fully missed that entire move.
Yeah.
Dude. Fully. And
Yeah, it's tough.
Rashing out. I was so pissed.
I remember, I do remember like that Q1 prediction. A lot of people had that, and specifically, I can't tell half the time if he's trolling or being serious, but base 16Z was taking like 5,000 or like 5,600 like puts on the S&P, and I was like, dude, like I don't know, like there's a chance he's right, and that would have been a pretty big sell off. And but yeah, like I with stocks, like I think, or I read too much on the timeline, and I don't have my own opinions too much on stocks, and really just no edge. So kind of just miss a lot of it.
We actually did get somewhat of a sell off in the beginning of the year, and I was taking those puts with base. I remember this, but the V recovery was just so sharp, and then I pretty much round trip most of it. That was a crazy recovery. I don't know, man. I'm still, and I don't know if you listened. I retweeted a video, a documentary from Paul Tudor Jones, 1986 through 1988. It was honestly one of the best trading documentaries I've ever seen. It's young PTJ. He's 32 years old, and he is Tudor Jones Investments is at like 120 mil AUM, and it's like where he made, kind of double the fund shorting 1987. There's another podcast from him from in April, and if you listen to the April one and then you watch the 1987 one, there's so much alpha leak in those two. Watching them together, dude, it was like I watched the April one and then I watched this one today, and I'm like, wow, I feel like I learned so much. And specifically, he's fairly weary of what's happening now. It resembles 2000 to him, but at the end of the day, him and Stanley Druckenmiller tell a very interesting story. They both tried to call the top in the 2000s, and when they did, they both got blown up. Like Stanley Druckenmiller shorted $100 million worth of shit. He made $3 billion on the way up, shorted $100 million worth of shit in late 2000, and the market just kept ripping on him, and he panic closed it for a massive loss, and then FOMO'd back in and lost like $1 billion because he FOMO'd back in at the Pico top. And you can listen to both him, PTJ, and Stanley Druckenmiller talk about these episodes, and it just feels so eerie similar to where we are right now. And it's like we all tried shorting the market early 2026, and now everyone's FOMOing back in. Is this
right at the top? Even like a sign of me like dabbling and buying paying. I even took a Dell position at one point. Like me, I am the end of the cycle. I feel like a person like my brain, the FOMO, it's hitting me at this moment. So
same.
Yeah,
dude, sure. Like not just you, but probably all of us who are somewhat sharp, you know what I mean? And like, and the issue is if you and I get hit in that situation, it's like, wow, I'm such an idiot. But then you look back at like PTJ, Stanley Druckenmiller making the same exact mistakes in 2000. And you're like, all right, we're all human. And like we fall victim to our psychologies all the time. And it's like, how do you learn from it? And like, do you make the same mistake 10, 20 years later? They obviously didn't. PTJ in the April podcast talks about how he thinks there's a lot of juice left, and he's like pressing the gas, or he was in April. I'm assuming he's probably more cash now. But I mean, dude, this is super late stage cycle shit for stocks. We got this bull ETF down 60% after having like a 600% move. Like that is not early cycle behavior from stocks. You know what I mean?
Yeah.
So
yeah.
I don't know how this ends. I don't have any stock. I sold all of my stock exposure that I hold long term, that I've held for years, over the last 60 days, 30 days realistically. Now I'm trading these on perps, and I'm also trading NQ futures. I've been having so much fun trading actual futures. I never traded futures in the past. I was always just a perps guy, but you can get so much size and leverage and minimal fees on this shit. Like, dude, I put on a $15 million position on Friday, and it costed me like under $1,000. And if I did that in perps,
through like a brokerage or like through
that's through Kraken, dude, through CME futures on Kraken. Nice. Yeah,
gotcha.
And if I did that in perps, I'd pay 20 grand in fees. And I was doing that last fall, dude. I spent like $1 million in fees in the fall of last year. Wow. It was so stupid, dude. It was so stupid. But nonetheless, this kind of looks super top to me. I don't know. This is like the classic diamond top position. And I hate trying to call tops on especially stocks because they're literally programmed to go up only.
Yeah.
But like
I was gonna say, you probably know best. Like it's really like in a funny way, like just the greatest Ponzi scheme on earth. One of my good buddies I talk to like quite a bit. He's just, dude, just keep buying stocks. Like you're like, all right, more so like ETFs or S&P 500. But yeah, it's just designed to go up. Like Roman Empire shit, like it's just gonna keep going until the collapse of the empire, probably.
So one of my best friends is like legit up like $4 or $5 million from buying stocks like 2 years ago, buying a few $100,000 worth of Nvidia and shit 2 years ago. And I mention him on the show all the time because he's kind of like my barometer. And I've been trying to get him to take profit for like 6 months now. And I'm in the wrong, right? Because he made so much more money not taking profit. And he consistently tells me, he's like, dude, it's a new paradigm. Like things only go up, dollars worthless, things only go up. And today when I was listening to the PTJ podcast from 1987, 1984 through 1988 were just like extreme years of prosperity and things were up only. And PTJ says at the end of 1987, he goes, these guys are, and I literally quote texted this to him and then sent him the link. I said, this is what PTJ said. He goes, these guys are buying because they've been reinforced in their minds for the last 5 to 10 years that stocks only go up and never go down. Soon they'll be grasping for air. And that's Paul Tudor Jones predicting the stock market crash of 1988 by correlating price action from the 20s to the 80s. And I was like, fuck, we're here again, dude. And I think about my boy who's like, dude, they never go down. And I start thinking like, wait, maybe they never go down. You know,
I mean, dude, 10 years of building evidence of they only go up. My portfolio is only up. Like, dude, that is just over time. You just like, you're just drinking that Kool-Aid over 10 years. And I mean, again, like, I don't know. I think eventually they all resume higher, but yeah, it's I stay sidelined and ready to go. Like I do want to take bigger positions in some stocks and whatnot, but
I mean, there's obviously stocks that you don't sell if you have a cost basis of like 7 years ago. You know what I mean? Like that's different. But like if you're buying Nvidia at the end of 2025, maybe not the best place to like add long-term bags. Someone in the chat, 55move7, he says, Spuno, what's your low for BTC? And this is, I was going to save this for the end of the show. We do this every time we have a guest, and I'm just going to force you to do it now. Gun to your head, you have to pick the low, absolute Pico low of 2026 and the high, what you think the next all-time high is. What do you think?
Okay, let me go. Okay, low first, starting with low. We are going to... It's so like you just want to like gravitate towards that early October date, just historically. But I think early October we're gonna have a dude. Also, this is another thing, like just superstition wise, like I get all woo woo with this stuff. Like just I feel like some unexplainable like almost black swan type event has to occur for a bottom to like truly just be like, I agree, locked in and like set in. I don't wish that, and I don't know what it would be or whatever, but. I feel like one of those types of events happen and we find ourselves, I'm going to say 47,500. 47,500.
You know what I should have been doing for the last fucking 3 months? I should have been marking everybody's prices of bottom that I've had on the show. I guess I could just go back and watch, but I'm going to start with you. You're 47, whatever. There you are.
47.5. That's what I'm thinking.
Spuno bottom. I'll leave this here and then I'll hold it against you and I'll find your house and be out there with a pitchfork if it doesn't happen.
I'll send you my bids at 47.5. If we get there, we'll get a couple coins and see what happens.
Man and I are on the same page. Every time we have a guest here, we end up saying the same thing. We both think it's going to be like a cascading bottom. There hasn't been a time where we haven't had a cascading bottom in a long time. And that's like when a cycle restarts. Like you see that the last was October 2022, FTX. And then since that, technically you can say this is a bottom, but we were still in a trend. So it wasn't. But I concur with you. It's going to take something to break. And maybe it's the credit system. Maybe it's the stock market. Maybe it's war. And it always ends up being the blame of that event. But it was pre-programmed by the liquidity that was, placed there many, many moons ago. So yes, I concur. I was thinking like 53. Okay. And then something like this for a bottom. But Who knows, dude? I don't like calling bottoms, and the reason I specifically force all my guests to call bottom is because I know it's probably one of the most uncomfortable things to do.
Everyone
Like,
hates to hear targets like that too. It's like,
yeah,
you're surrounded, especially me, like in, meme coin world a little bit. It's like everyone's moon boys. They're just holding thousands of Solana or whatever it
yeah.
is. And I'm just like, fuck, man. Like, I'm sorry to say, like, I mean, I'm probably like more, I don't know, very could be wrong, but yeah, like I just think, even Solana, like something like Solana, dude, I have targets of like low 40s for Solana, like maybe high
Oh my
40s,
God.
sorry. But I mean, it's just got to break.
Dude,
Everything's got to break, and then we reset. And then, dude, yeah, like you'll be fine eventually. But
I completely agree. I mean,
4 year cycle believer.
yeah, dude, it's funny. Everybody that we've had on has pretty much had the same opinion, which I don't know if it's a cognitive bias because we live in a very niche circle where we're all kind of sharp, or if it's like consensus and we're all wrong. You know what I
Yeah.
mean? Every single person we've had on the show has been like, yeah, somewhere between 40 to 50. And either we're all like, we're a very small percentage of the population that is in agreement, or we're just fucking NPC left curving it super hard and we're
Yeah.
all consensus.
Yeah. I
And it's
think
just like,
here's another thing with the 4 year cycle, though. Another, like the greatest argument against it, which I do like, is it's such a small sample size. Like Bitcoin, okay, you break it up into 4 year segments. It's, dude, what is it? Like a sample size of 4. It's, like one of my buddies, he says you would fail statistics with that as your sample
yeah,
size if you're like
very
basing
true.
trends. And it's just like, so I mean, people make claims on, X and in the chats and whatnot. Like I think some people think it already happened. Yeah, sample size it's not a lot to base it on.
I agree with you. I just don't think a bottom looks like this, dude. This isn't what a bottom looks like. You know what I
Yeah.
mean? So
I have less
can't.
experience with that, but yeah, like it feels like there's needs to be a sharper stab at some point, and we just haven't.
Yeah, it's either time capitulation or price capitulation, and it hasn't been time in terms of extended period of time. It's really only been, what are we going on, close to a year now? Not even.
Yeah, I mean, yeah, I think less.
Dude, it's crazy that 1010 looks like such a little blip.
Dude, I remember seeing, yeah, like I remember looking at it probably January or February and just thinking like it doesn't even like it doesn't even show up on the chart really. Like it was such an event, and it's like, oh well, that like didn't even, I mean, leverage event, but yeah, it's like spot bags didn't get like too crushed actually.
Or that was a real extinction event. I actually got eliminated on that day.
Tell me more. Yeah, what kind of positions, like what exchanges, what happened?
Oh, in hindsight, when I look at the chart as I tell the story, it's like, wow, that was so obvious. What was I doing? But BTC starts to sell off, and I'm like watching Trump headlines. BTC starts to sell off from like 118 to 114, 113. And I'm like, all right, that doesn't look like a bottom, but I'm going to start bidding. So I start bidding at like 111 to 109. And I'm like 5x long. I have like $1 million in the account. I'm like, oh, I need like a 20% wick to murder me, which is funny. But so it starts to sell off. And then there's like one really aggressive wick that goes down to, I think it was like, this is the 1 hour. So somewhere in this 1 hour chart, but it goes down to like 104 from like 109 very fast. And I have to leave for a bachelor party, and I'm sitting at this desk here, and I'm like, holy shit, I'm going to add. So I end up adding, and I'm like maybe 10x long at this point. And I'm looking at the account, and I'm like, oh, that's kind of gross. Maybe I should add some collateral because, like 10x is 10%. I don't like 10% wicks happen all the time. So I was like, I'm going to add some collateral. So I have the dumbest thing I've ever done. This is the same way I died in 2021. I deposited a lot of money onto Bybit, and I'm like, whatever, I'm safe. I'm like, this is not bad. I have a liquidation like in the 80s, and we're at like 109. Like that's not going to happen. And then I get in the car. I deposit the money, get in the car, and I'm in the car on my phone, and my girl is driving me to this bachelor because it was at the casino. And I'm like, this feels weird. And I'm like sitting there refreshing Bybit. I'm like, this looks bad. and then it hits like 102. But as it's hitting 106, 105, 104, I'm like jamming. I'm like bottom.
Dude,
And
no.
at some point, I'm long like 8 figures. I'm long a lot of BTC, and I'm
Oh
long
man.
ETH, and I'm long something else. And then everything freezes, and I'm on my phone, and I hit one refresh, and I get the liquidation notice, and I'm like, wow, there it is.
Dude, so
There it is.
crushed. Oh man.
I was very upset.
Dude, I remember I was actually on my way to a baseball game, and I didn't have any leverage positions at this time, or really like anything. I wasn't affected, but I just remember like trying to explain to my friends like what's happening, like because I still like have a lot of like normie friends, and I hang out with them all the time, and they just like don't understand what's happening, and I'm in these group chats, and people are like, dude, I just I'm smoked. I just lost X.
eliminated.
Yeah, like some people writing, very, very sad messages, like, and I'm just like, I'm surrounded by people who are just so not in my world, and they're focused on this baseball game, and I'm sitting there just like, dude, I can't, like, this is like, yeah, just such an event in my world. Like, I don't even know how to explain it to you guys besides price just got incinerated. Anyways, yeah, that was my experience. I didn't get, touched in any positions, but yeah, it's
Have you ever
day.
blown up or like been in a spot where you're like, well, that was in hindsight really stupid, and I shouldn't have put all my eggs in the basket?
I believe it or not, like I've done very well. I would say like on a month to month time frame. Like ever since I started, quote unquote, making money like in crypto, I've been positive every month. Like I've always continued to grind the portfolio up, and then nothing like super big like major position that like hindsight whatever, but yeah, just these last 2 months like I've been getting torched, and it's the first time I've really like experienced kind of consistent and sustained losses, and it's all on-chain stuff. So it's more so just like my portfolio rather than I would say like a single position. I mean, that Repe trade, that was actually my biggest loss ever, and that was on Robinhood chain last week. So
the Pepe
coin. Yeah, but I mean, yeah, it's just like I don't know. I feel like
at what point did you accept the loss? Were you like adding to it as a losing trade, or at some point where you're like, all right, well, this is stupid?
No, I didn't keep adding. I did add at one point, but kind of it like broke like 1 million, and I was like, dude, this is like so cooked. And then I think my position at like 600K market cap, my position was still like 10K. Like I had like a good amount of this coin, and like
wait,
in
you had like 1.5%, dude.
Yeah, yes, dude. And I paid a premium for it. And and then yeah, like it hit like 300K in 1 week. Like just no liquidity, just typical trench stuff. And just the 10K went to 5K, and I was like, all right, bro, I'm out. But I don't know. It's just like I hate to say it, just kind of the theme of my trading recently. But on the other side of that, I think the reason that is, and I put out a tweet, is like, dude, I'm just enjoying life a lot, and trying to be very like aware that we're in a bear market and opportunities are more scarce than they will be in the future, hopefully. So yeah, like other side of it, dude, like I said, I was in the woods all weekend camping with my friends. Like I've been golfing a lot.
Awesome.
I've been taking time. So
that was my biggest mistake for like 4 years, dude. I just like never put it down, and I know I can't put it down. So like this year I was really smart. I just sized everything down. I withdrew so much money. I was just like, I can't let what happened in 2021 happen again. Make a bunch of money, lose it all. I was not going to play that game again.
Damn, I don't know that Ponzi lore. That's damn.
Oh, dude, I'll send you the tweet. I have a tweet that went pretty viral in 2021. It was like my account went from like my Twitter account went from like 7,000 followers to like 25,000 followers overnight, because I was starting to host spaces, and I hosted a space with like Kobe and Bob Lax, and they were fighting with Scott Melker, and BTC was trading from like 42 to like 35 and starting to like sell off. And then I'm hosting the space till like 3 a.m. and I made the same fucking mistake, dude. I had accumulated like almost $1 million in trading over 4 years, and I put it all on a ledger and a Coinbase account and this and that. And then I I'm like, you know what? I'm gonna put on a levered position. Not even actually, dude. I didn't even put on a levered position. I placed bids on Sushi, XRP, and ETH, and I dumped my entire ledger into 4 SEX trading accounts. It was like FTX, Binance, Bybit, a few others. And I was like, I'm just gonna place bids. I'll just place bids. I'll be safe. And it'll be like 3x levered.
Sushi. Yeah.
Bro, Sushi went from 21 to $2. It went from $21 to $2 in a wick. And my bids were from 9 to 11. And so I get filled and liquidated in the same wick, bro, on Binance. And I got fucking eliminated. I lost everything. I had like 12 grand left from the million. And I was sleeping when this happened, dude. And I wake up. I was living with my mom at the time. We were renting a place. I have my girl, who I'm still with today, sleeping next to me. She knocks on the door. My mom knocks on the door, and she would never do that. I was kind of like the man of the house. You know what I mean? So like, she just didn't really like, she let me do my thing. And she knocks on the door and she's like, yo, your brother's calling. She's like, oh, honey, your brother's calling. And I like roll over, check my phone. It's like 7 a.m. And I just saw, dude, like Gainsey had called me, Keyboard Monkey had called me. Like everybody had called my phone. And because they all knew from the space that I was mega positioned. And I saw the liquidation notices and I was just like frozen, dude. I was just so frozen. I took 4 years to build that stack and I lost it all right there. It was the worst, the dumbest thing ever. And I was like, oh wow, I'm actually cooked. But I ended up turning that 12K into 70K by September, and then the fight back started. And that was when I just started like crawling back.
Dude, having that like like even having a fight after that, like that's impressive. And I mean, dude, it's I've heard like more stories than I thought I would, but of people like who genuinely just lost everything and ran it back like 10 times harder. Like it's just like,
dude, you'll hear in the PTJ podcast today, he says it in 1980. He's 32 at the time of the podcast. He's like, over the 9 years that I've been doing this, I've lost everything 3 times and made it back.
Bro.
And so it's like now he's a multi-billionaire. He's one of the largest traders ever.
Dude, I like to think I'm like a risky guy, right? Like I guess by nature, just trading crypto is risky, but like, man, like I don't know, like I don't think I'm cut out for something like that. Like maybe, I don't know, if time comes.
Dude, and it's not, people say like, oh, everybody's gonna do it. Like, no. For example, Don Alt never blew up, or so he says, or like Crypto Cred never blew up, or so he says. Like a lot of guys, it's really what it comes down to is the classic ladies liquor leverage, and leverage is the one that actually causes you to blow up.
Ladies liquor leverage. That's crazy.
You know who
That's
said
a good one. That's bars.
Said that?
No.
Warren Buffett, ladies liquor and leverage. Those are the 3. Dude.
The spot king said that.
The spot king is all cash right now. He's 36, 360 billion.
Talk about him being. We're saying we feel sidelined, bro. I mean,
well,
granted, he's worth
brilliant,
so much, but
he's not gonna be wrong. He's just early, dude. He's early, like.
Dude, I think that's the same thing. I think that's the same thing. Like low key, every now, like
wrong
those lines get blurred, dude. Like. There's been times where I've been so early to things and I just lose money on it. And then like a week later, it's like, oh, that's the best thing ever. So
the other thing with him though, is like with 300 billion, like you have to.
That's the point. Yeah. It's like, okay. Like
you got to be years early, bro. If you try to close those position in like a month, you are the market. You know what I mean? Like,
yeah,
that's just how it ends for everybody. You are the way it ends. It's the same way with the car market. I have a funny story. I don't know if you're into cars, but they're fucking pumping, doubling in like months at this point. It's absurd. One of those cars is the 458. The 458 is up like 2x in the last 2 months. And there's only like a few on the market for sale. I know a guy who has 200 of them. And there's like 12 of them. There's 12 of them for sale on the market right now.
The Kabuto King for 458.
Bro, I was like, what happens if you sell? He goes, I wouldn't, but they go to zero. You know what I mean? Like 200 of them as opposed to fucking 10 of them. So Berkshire.
Dude, what an alternate market to, I mean, not necessarily super alternate, but like, yeah, I'm just like the 458 guy. Like that's what I do.
Well, he has like 400 Ferraris. He sold a massive company to BlackRock. A few years ago. So
that is pretty sick.
Yeah. Different game. Absolutely different game, but it is supply and demand elasticity at the end of the day.
How old are you, if you don't mind me asking?
I'm 28.
28. Okay. Wow.
Yeah. Cool. I feel like I'm 40 though, dude. I've been doing this for 10 years. Oh, that's the other thing PTJ says, dude. I love it. You got to watch it, bro. He goes, He's 32. He goes, yeah, I'm just hoping that I can make enough money someday to retire and not do this anymore. And here he is, 78 years old, still doing it. Never left. Dude. Yeah. These guys never leave. We're just like them. We'll never leave.
Dude, my first bull market, my goal, I have it like written down in my old notebooks. Like I was like, dude, I'm going to make 50K this year, and that's going to be like enough for me. And I'm like not going to touch crypto again. And like, it's just, like
never leaving.
It's such a shorter time frame, but yeah, like I just kept the foot on the gas, and I don't think I like at this point in my life, there's nothing else I'm good at or like, whatever, but like there's nothing, I'm not like, I have no edge in really anything else, and I love this shit like a lot. So yeah, we just keep it going, man.
With that, I would say we're at the end of the show. I'm going to ask you what your Bitcoin prediction is, but you already did that. So thanks for everybody coming to another episode of the Crypto Closeout. We lost our Canadian friend, Spuno. Thanks for taking over, sticking around the whole time. You should come back another day. And we 100% will be holding you accountable for the Bitcoin price prediction you made of 47,500 being the bottom.
47.5. There we are. Thank you, guys.
Have a good night, everybody.
Yeah.